Does suspicions that the Chinese are hacking into federal employees' data get in the way of what would otherwise be productive discussions on trade, on banking and investment?
Great question. Personally, I think not.
Why is that?
If you take a step back, this initiative has been going on, this annual discussion has been going on actually since the Bush administration in 2006. And it's a really critical talk where multiple different people from both governments, multiple different verticals get together and have a very frank discussion. You think over that period of time, every single year, there's always something that creates tension. Mm-hmm. And they've gotten through it, and this has been, a dialogue that's been quite instrumental for change and development of a relationship. I don't think they're that short-sighted.
Do you think they're going to talk about the Chinese stock market, which has been on an absolute tear and has people wondering if there's a bubble that's about to burst?
Well, I would imagine that could be part of a conversation on the more economic side of things with the Treasury folks, but, part of the spurring of this market rally has been the whole thesis of reform and opening up of the Chinese financial marketplace and institutions. And to the degree that the Shanghai-Hong Kong Connect and potential RMB liberalization and lots of other aspects of financial reform spur a theme that picks up momentum that their retail investors go bonkers about. That's part and parcel of what we're seeing here.
Okay, so to some extent it forms the backdrop of their discussions. Speaking of this tear that the stock market's been on, 41% gain year to date for the Shanghai Composite, but it did enter a correction last week, so we should note that. Give us some perspective on these Chinese stock market rallies, because historically they don't tend to end very well.
No, it's very true. We've actually seen 6 episodes, this being the 6th, where we've had 25% or greater spikes in the Chinese market going back to the early 2000s, and every one of them has ended poorly. And in fact, there's been prolonged periods of time in the early 2000s and then in the 2010 through 14 period where we had multiple years of just malaise. The spikiness really goes back to what I had mentioned before, the fleeting nature of the Chinese retail investor, where it really hasn't been an institutional marketplace. It's been a fad and a theme with retail investors. And, that's been part and parcel of this, and we're seeing it again now.
Fidgety investors. Well, you've got a chart tracking market cap to GDP, China, the U.S., and the world average. If we can pull that up, what it shows is that China's ratio has more than doubled. And there you see it, China being the purple line, the blue line. It has more than doubled, but still in line with the global average, and actually well below the U.S., which is in red. So this is music to the bull's ears, isn't it?
Well, it's a funny thing, because you think about valuation with the Chinese market in so many ways, and it's very expensive on PE and lots of other measures. This is the one measure where there's actually some value. And funny as it is, it's Warren Buffett popularized measure.
It's a Warren Buffett metric.
Yeah, and if you saw better profitability over time with higher margins through the Chinese corporate, especially SOE front, then their earnings would improve relative to the base of GDP, and you can in fact see lower multiples relative to what we currently see. So that all feeds into at least some value aspect, maybe, of the Chinese market.
All right. So